Hello again, everyone. Welcome to yet another edition of Frazier Deeter's Business Beat. I'm John Ray alongside Roger Lusby. Roger.
Good morning, John. How are you?
Great. How are you doing today?
I'm doing fine. Tax season's over. I just got back from Austin, Texas at a tax conference, so we're loading up with new knowledge and
there you go.
Getting ready for Thanksgiving.
Yeah, you had a great conference. I saw that on social media. You all put on a great show.
Yeah, thank you.
Yeah.
Almost 200 people there in Austin.
Yeah.
But amazingly, it was about 34 degrees in Austin, Texas. That just doesn't happen this early.
Wow. Well, that's terrific stuff. And folks, Frazier Deeter, just a reminder, is an outstanding CPA and advisory firm that serves clients across not only Alpharetta, the North Georgia area, but really across the country and internationally with tax planning, estate planning, business tax planning, employee benefit audits, internal audit outsourcing, cybersecurity. If you've got a business problem, they can help. Mergers and acquisitions, let's throw that in there as well. But the folks at Frazier Deeter serve clients ranging from business owners to executives to large corporations. Bottom line is Frazier Deeter invests in relationships to make a difference. If you want more information, go to FrazierDeeter.com. Now we turn to an old friend of all of ours, Carter Barrett. Carter's been around a while, and we're here to hear his wisdom this morning. Carter, introduce yourself. Tell everybody about you and what you do.
Good morning, everybody. I'm Carter Barrett. I'm the market president for Affinity Bank here in North Atlanta. I'm a serial entrepreneur and a 30-year commercial banker. I started my career June 4 of 1990 with Wachovia Bank on the town square in Cumming, Georgia. And after spending many, many years being very involved in the community and banking middle market and smaller companies, in 2008, I started my own bank with two of my good buddies from Regions Bank. We went out into the market and raised $16.8 million from 313 local investors. And we opened in January of 2008. The morning we opened, the Federal Reserve cut interest rates 0.75%. It was a historically large cut, and the economy promptly fell apart. So we all looked at each other, and I literally said, guys, put on your seatbelts. It's going to be a bumpy ride. We grew our bank from 2008 through 2015. Very successfully. I'm proud to say we were one of the cleanest banks in America. We enjoyed a Texas ratio, which is a metric of non-performing assets relative to a bank's capital and their loan loss reserves. We had a Texas ratio of 0 every quarter for 7 years. So we were one of the cleanest banks in the country. We were small and simple. And from our perspective, simple is better in business. Have a well-defined business plan and stick to it. Of course, be willing to learn some new tricks along the way, but the fundamentals never go out of style. So make sure you have good friends and great CPAs, friends like Roger Lusby, and you will stack the deck in your favor and to achieve a successful outcome.
Yeah, Carter, I'm so glad that the 2008 year is past us. It was actually May of 2019 that I came out here and helped our firm open up the Alpharetta office. And, you were one of the people that I was told that I needed to meet and to get to know. So thank you for all your help over these years.
It's been a great privilege. As I'd mentioned before, and on many occasions, people used to say, Carter, what are you going for in building your bank? Who are you trying to emulate? And I'd say, well, actually, I'm not trying to emulate a bank at all. I'm trying to emulate Frazier Deeter, as I was always impressed when they decided to come to Atlanta. North Atlanta, and plant a flag up here, which was kind of out of the ordinary. Y'all were enjoying just tremendous success in Atlanta, doing just what you were doing. And a lot of times people say sometimes when you're winning, just keep winning. You don't need to change things too much. But that was a pretty bold move, I thought. But more importantly, when you got here, the way that y'all made a splash and plugged yourselves into the community in such a profound way very quickly always got my attention, and y'all always did it much better than we did. I've been here for almost 30 years. And so just that sort of steady drip approach always worked for us, but I always admired how y'all did it at Frazier Deeter.
Well, thank you, Carter. I mean, this area's got tremendous demographics, as you know, and you've got some new and exciting opportunities that you're working on yourself. So we think that this area certainly has got the educational and the income levels that can really, really help.
Now, Carter, tell us about what you're up to now. You told us about your past successes, but you're on the way to future successes with some of the things you're working on now.
Well, thank you, John. When we sold our bank in 2015 to Community and Southern Bank, I was kind of scratching my head saying, okay, what do you do next? I took a hiatus from banking and formed a company called Dime Capital with two of my very good friends, Grant Schmelk and Ben Haybeck. And the basic idea behind that company was, in a banking, you raise a bunch of capital and you borrow a whole bunch of money. But the money you borrow, you really call it deposits. And then you turn around and you invest all of that big pile of money into real estate projects and you invest it into small businesses. But the investments you're making, you actually call them loans. I said, guys, wouldn't it be great if we did just exactly what we used to do in the banking industry, but without the bank? So let's go look for real estate opportunities and small businesses to invest in potentially and also to consult with. Sort of the exact same things we did in banking, but we'll do it for our own account. So we actually formed a company called Dime Capital. Dime Capital invests in real estate projects. We owned a building together with other investors at 44 Milton Avenue, for example. We are partners in a co-working company called Thrive Co-working. Thrive occupies that building at 44 Milton. So we're always, I guess, like Larry, Darryl, and Daryl. What was that? The Newhart Show, or whatever
right.
that was.
Bob Newhart Show.
Right.
Anything for a buck.
Yeah. But
presently, in my latest role, I'm now the market president for Affinity Bank. Ed Cooney is the CEO of that bank. It's about a 19-year-old bank headquartered down at Galleria. Ed is one of my very best friends in the banking industry, and I think he saw the benefits of doing a lot like Frazier Deeter did, planting a flag here in North Atlanta as an opportunity to diversify their bank geographically and also across customer segments. And so he allowed me he honored me with an opportunity to come help him do just that. So basically do what I've done before. And I'm fortunate in that our first addition to the bank in North Atlanta was a guy named Andrew Bell from BB&T, and Andrew's just simply fantastic. He's a super connector. He's one of the nicest people you ever met, and frankly, I can't imagine why an entrepreneur or a business owner out there wouldn't bank with an Andrew Bell, because he's one of the greatest guys in the world, and he would give you the shirt off of his back, and he's also super smart. So my instinct is if you bank with an Andrew or a Carter in an Affinity Bank, hopefully your family will be safer and more secure, and you'll be wealthier someday, I predict.
Now, Carter, you've got we were talking before we came on the air about, some of the ways that you see business and business working and how folks get into business hard charging and then they inevitably run up on the rocks because life happens, right? Talk a little bit about your thoughts on that and how you help navigate businesses through those inevitable tough times that they run into.
Well, John, the thing I'm most passionate about in the whole world is building enterprise value. I'm kind of funny. I'm not a great golfer, but I do love business. I dig business, and how do you take an average business and make it better? And what makes two companies in the same industry, and one's a world beater and the other's just kind of an also-ran. And historically, up until 2008, this is a very forgiving market for business owners. So even the sort of so-so businesses tended to do okay up here because it was just such a robust economy. One thing I've observed, though, over time, and it's just kind of it's a real bee in my bonnet, is the difference in valuations in businesses. When I look at Wall Street versus Main Street, I look at a Home Depot that probably trades for 23 times earnings. And then I talk to the small entrepreneur and he says, I'm interested in selling my company, but I just don't seem to be getting offers that are attractive enough. I can't afford to sell. As an example, I made $300,000 last year and someone's trying to offer me 3 or 4 times EBITDA for my company. And I think, well, that's only 3 times that is only $900,000, but then I've got to pay capital gains taxes for that, for a state and federal. And I've got to, and the buyer wants me to finance a portion of it. So I have to finance 25%. So I'm going to leave the closing table on a $900,000 sale with $450,000. Well, heck, I made $300,000 in EBITDA last year anyway. I can't afford to sell. And why does a Home Depot trade for 23 times earnings? And people are offering me 3 times EBITDA for my company. I said, well, you do a bad job of telling your own story, and you're probably telling it to the wrong people. So how do you build enterprise value? How do you create real wealth? How do you enhance that value? If you can take that 3 times EBITDA, that 3 times 300,000 as an example, and turn it into and with a turn of the screw here and a turn of the screw there, sort of bring some operational efficiencies. Maybe if you need help driving the top line, driving that 300 profit into say a 5 or a 6, and drive that valuation up. A $300,000 EBITDA to 3 times valuation is worth $900,000. A $500,000 EBITDA at a 6 times valuation is a $3 million enterprise value. I would tell you that for most companies out there, that's not a radical top to bottom overhaul to do that. That's a turn of the screw here and a turn of the screw there to create those operational efficiencies, maybe drive the revenues, re-energize a management team to drive that bottom line performance up, and then make sure that you're traveling with the right people. You've got the quality of your financial information, for example. Are you traveling with a Frazier and Deeter? Are you traveling with your old friend who's a decent, honest, good person, but they maybe don't have the credibility that a Frazier and Deeter would bring to the table? So how do you take that small enterprise value and with a turn of the screw here and a turn of the screw there, really enhance that value? And I use that very simple example, 300,000 and EBITDA times 3 times multiple versus a $500,000 EBITDA and a 6 times multiple. The delta is $2.1 million between that 900,000 and that 3 million. And I see those types of companies everywhere. Lately, it's been bothering me, frustrating me, because I think, where do you invest today when the Dow is at record highs? Real estate is very dear and it's certainly pricey, feels pricey. And you think, what's the last great bastion? I look at the small companies. I look at all the mom and pop type companies out there that are going to have to change hands. We all talk about baby boomers. It's really the elephant in the living room, as far as I'm concerned, as far as opportunities out there. These companies are, it's the husband and wife who build a great company and they start when they're younger. And they've just absolutely bootstrapped it, but maybe some of the fundamentals that need to be applied to make it go from being a good business that they've bootstrapped and made it a success to making it into a great business by putting some basic things in place for succession, for enterprise value. To me, what happens is what I'm seeing a lot is that husband and wife team. Life happens to us.
Sure.
I'm 55 years old now. I feel different at 55 than I felt at 45. I'm not quite as energetic, not quite as driven as I used to be. Now I'm very driven.
Yeah, I was going to say, I think I dispute that business about not having as much energy, Carter. But anyway, you've got a lot of it right now. I love it. But I want to, before we lose this point you're making about a turn of the screw, and I like that metaphor, talk a little bit about what you see with a lot of businesses out there. What are some of those small improvements in processes that they can make that you see getting ignored that would help improve ultimate bottom line and ultimate valuation?
I can think through, as I think through in my head about different companies I've dealt with.
Sure.
Most companies don't have really excellent financial controls. Most companies don't have a Frazier and Deeter. Most companies you'll have a CEO that might have what he considers to be a competent, quote unquote, CFO, but it might be a bookkeeper who's been with them a long time that can't do a proper budget, can't do a really great set of projections, real basic stuff. So financial controls. Are you traveling? Do you have a really great value-added type banker who knows your business really well? Do you have a great CPA who really understands your company and can also go, not just here, give me your information and I'll give you back your tax returns, but someone who is your de facto board of directors? Your CPA I've got a relative once who said, I've got a CPA over in Augusta and, he's fine. The work's okay. He doesn't cost too much, but, I don't really like the guy. And I thought, well, that's crazy. Your CPA should be one of your closest people. That guy's he will help guide you into building your company into a great company. He'll be a guy that will be there. He may help you meet that next company, that next acquisition opportunity for you. Familiarity doesn't breed contempt. It breeds familiarity. If you don't like your CPA, you shouldn't be, your wealth management guy, your banker, those should be your inner circle as an entrepreneur. Those are your go-to people there. If you don't have a board of directors, which I always think is a pretty good idea to have a board of directors, but if you don't, you have it. In effect, you do have one. If you have the right CPA, the right banker, the right insurance guy, the right lawyer, certainly. Our lawyer at the bank that I ran was a guy named Steve Dunleavy. He was absolutely brilliant. Our board used to say, "Oh, he's too expensive." I was like, "Yeah, you know what? You don't want to use a Ferrari for your daily driver, but it sure is nice to have one in the carport."
Sure. Well, it sounds like, Carter, you're looking at the way just stepping back from the financial processes that you mentioned and financial controls. You're identifying a problem that businesses have in the way they use their advisors. They don't use their banker, their CPA as a board of directors. They use them as a service provider, but not as a true advisor.
Yeah, and some of the things I would add as that CPA is the fact that business owners need to understand what their real value drivers are, because it differs by industry. And so if that company's going to sell based upon gross revenue, then gross revenue is important. If it's going to sell on EBITDA, then EBITDA is important. And some of the things that I see is they need reviewed or audited financial statements. If EBITDA is a factor, then keep the company clean. Don't have all these adjustments for so-called personal expenses when it comes time to sell, because EBITDA then is important. If it's revenue, look at who your sales are going to. Do I have one or two big customers? Because if that's the case, they'll probably discount that with respect to any buyer. And then the other thing is am I filing in all the states that I need to file? Because I know that's a rep and warranty that we usually have trouble with when a new buyer is coming in and looking to purchase some businesses. But those would be the things that I would say. Does he have key employees under employment contracts that would survive an acquisition? Because that can become important. Does he have the right amount of leverage in finance that he's using within his business? Because that can become important. And so those are some of the items that we see as well.
What's interesting is not all bankers, not all CPAs are equal. A firm like your firm, Roger, has a great depth and breadth of talent. So that even and I know Roger very well. Roger, you're one of the most well-read people I know. You're very articulate on virtually any topic I would throw out there. But I know that if you don't know the answer, you have tremendous resources there in your firm that I can hit you with just about anything. And you may not give me the answer right away, but you'll have access to it in short order. I always use a metaphor. If you're going to sell a company, if I were selling a company today, the metaphor I use is, imagine you're walking down along the cliffs of Dover in England, and it's a foggy, rainy day, thick as pea soup. You can't see 3 feet in front of your face. You need to walk 500 feet from the edge because you don't want to fall over. But on a bright, clear, blue, sunny day, you can walk 2 feet from the edge, and you'll be just fine. As an entrepreneur and a business owner, a person should always thrive to have it be a bright, clear, blue, sunny day. In other words, if I'm positioning my company to sell someday, I want to make sure that they can look at what I'm selling and have tremendous confidence, because that's going to affect how much they're going to pay me for the company someday, my enterprise value. So the quality of my financials, there's a transference of credibility. When I'm associated with a Frazier Deeter or a great CPA firm like that one, and my lawyer is that person in town that is just so smart and so well regarded, You know, in our bank at Community Business Bank, we had a Superior Court judge for our chairman. He was simply a fantastic chairman. But it also sent a message to the world, I think, subliminally, this is how we're going to conduct ourselves in business. That I was very pleased to have a Superior Court judge as a chairman. He was just a tremendous chairman, had that wisdom of Solomon thing. But the goal for every business owner ought to be build a company like you're going to have it for 5 generations. Don't build it just to sell it, but build it like you're going to keep it for 5 generations. The irony is when you build a really good company, you won't be able to stop people from approaching you to try and buy it from you. You have a lot of flexibility. But that proverbial bright, clear, blue, sunny day is about when a suitor is looking at your company, that they can have great confidence in what you're presenting. That if they're paranoid or insecure because the financials are not clear, they're going to discount. When I show up and I have really excellent quality financials, I have an audited financial statement from a Frazier Deeter or something like that, they're going to be able to rely on those financials. So they're not going to feel the need to hedge. That's going to result in me getting a top dollar. You know, when I sell a company, when a company is sold, unless it's selling to a publicly traded company, the price that they're going to get is largely a function of the financing in the middle. Well, who better to help with the financing than the banker that's already dealing with the company? People often say, Carter, I'd like to buy this company. Could you give me your advice? Which bank should I go talk to? And my immediate answer is you want to go talk to the bank that's already banking them. If they've got a good banker, that guy's going to know that company really well. And if it's a really good company, he's not going to want to lose that customer. He's going to want to finance the acquisition so he can keep the customer. But he's going to know the company really well, and he'll know the inherent capacity of that company and its cash flow and how much debt it can service. So the banker will be more bold in how much he can lend to help the buyer buy that company. Does that make sense?
Mm-hmm.
Yeah, absolutely. Now, Carter, I think what you're outlining here is that for folks that, again, business owners that treat their bankers as simply a place to do a transaction, a place to make a deposit, to get a loan. You're talking about using your banker as an advisor. So you've been in banking a long time. Give business owners suggestions on what they need to look for in their banker in terms of looking for that advisory relationship instead of a transaction relationship.
In every bank that I've ever worked in or run, I was as the CEO of our bank and founder and director. We used to have a philosophy at our bank. Our bankers should be the most well-informed and most well-connected bankers they know in the market. If there's a piece of dirt moving and some yellow equipment out there moving stuff around, we ought to know about it. We should know who's doing it and what they're doing. We ought to be super connectors because there should be a burden of friendship. Being friends, hey, Roger, good to see you. Let's go to a ball game when everything's going great. Well, that's all well and good. But if I'm really your friend, I should actually give a darn about you. I should care about your family's security. I should care about your future. I should help you make a better living. There should be a burden of friendship, which means I'm going to actively go out and look for opportunities for you. And I get great joy. Guys like you, if I can make an introduction for guys like you, and y'all and stir the pot and y'all create opportunity amongst yourselves, man, nothing makes me happier than that. So you want a banker who is actually absolutely proactive. He's working to plug you in to get you better connected. Now we're
and that's huge for that business owner. And to me that matters. That means a whole lot more than 1/4 of a percentage point on an interest rate.
Hallelujah to that. You want to talk about what's expensive? What's expensive is having a bad banker and a bad CPA and a bad attorney and a bad insurance guy. The opportunity cost of having bad advisors with you, you have no idea what you're giving up on the upside. Having a great advisor, whether it's any one of those guys or ladies, is you're better connected. You'll have a richer, fuller life. Not just financially, literally, your family will be safer if you're traveling with the right people? Why would you not avail yourself of the smartest people you can find who are absolutely connected, that are absolutely committed to your success, and not just order takers? There are people that I know that Roger Lusby knows so many things that I don't know. Why on earth would I not have that guy on speed dial so that he can advise me? I can honestly say I have different CPAs for different businesses and different investments. I'm absolutely a customer of Frazier Deeter, and I have tremendous confidence when I get tax returns from Frazier Deeter because I know what a good job they're going to do. I know I can rely on them, and I'm going to feel more secure when my tax return is all bundled together and ready to go. I can absolutely rely on those financials from Frazier Deeter. So why on earth would you not avail yourself of people in your inner circle who are absolutely connected, absolutely committed, and super duper smart? You'll get richer because of it.
So just taking a slightly different turn, Carter, what does your crystal ball say for the economy over the next year or two?
Yikes. What a tough
Was
question.
that a good yikes or a bad yikes?
It's a generic across the board yikes. Yikes in that it's a tough question.
I mean, we just had the Dow cross 28,000, another record. Most businesses that I know are having fairly good years. I still don't think it's like 2007 when every business, regardless of industry, was doing fantastic. But, I always like to hear your thoughts.
I feel great about the economy for the next several years, barring that black swan event that none of us are seeing right now, and those do happen. And I think that the main thing is one of my favorite words in business is elasticity. I want the people that I'm associated with in business to thrive in any environment. I want them to do well when the economy is ripping, and I want them to do well when the economy is not ripping. And that means building in margins of protection for yourself so that you can sustain yourself in any environment. Something I don't necessarily do, but I fully am committed to doing, is having a generally optimistic attitude. Individuals and families, I think, should look at their own situation like universities do. They're not thinking about next year. Well, they certainly think about next year, but they're also thinking about 100 years out. Families and entrepreneurs should think that way as well. Don't be afraid to take risk. I've been too conservative. I did have a very clean bank. I'm pretty cautious, pretty conservative. It served us well during that very strange environment. But I'm also a believer that people should be optimistic. Build in margins for error so that you can sustain yourself during the tough times. But don't be afraid to act. I find that objects in motion tend to stay in motion in business. Try things. Don't be afraid to take risk. When you're wrong, usually you're pretty smart people. You'll miss by 2 feet, not by 2 miles.
Yeah, and you can usually tell early if you're wrong.
Absolutely. So don't be afraid to take risks. Just build in mitigating factors to allow yourself to take the risk. I feel very optimistic about the economy. What I'm not so confident about is where do you invest today to get a good return? Things are fairly energetic on the real estate front, on the stock market. I'm trying to think, Roger, where would you put $1 million in cash today? And I would challenge you with that question.
Yeah, I mean, it's always the great question. I mean, historically, we've still been adding to equity positions in the market, but most people know that the market is at an all-time high, so they're cautious, but that probably is very good in the fact that it's not going to plummet because there's so many people that are cautious about it. So usually when it plummets and catches everybody by surprise, nobody's talking about it. Nobody's looking for that. And so that's been kind of interesting. But I would say to you that I still think the best place to put money is to invest that money in yourself and in your knowledge and in your education, and then probably within your own businesses. And to me, that's what's always had the greatest return.
I would add one thing to that, and in your relationships. There's tremendous power in your Rolodex that people sometimes forget to harvest. In the world, there are idea people on one hand, there are resource people on the other hand. And if you're an idea person, you have a prolific, great new mind for ideas, and you're creative like that, you might have 2 ideas a day or 2 a week. But you might be, well, I don't have any money. Boy, it'd be great, but I don't have any money. Well, for heaven's sakes, get some money people in your Rolodex. If you're a guy who's got resources, but you're not all that creative, you don't have great ideas, get some idea people in your Rolodex. We're here on the 400 corridor in North Atlanta. There are acres and acres of diamonds up here. Entrepreneurial opportunities everywhere. It's better if you're not sitting on your sofa all the time, but out there mixing it up, hanging out with other smart people. You'll be shocked at the opportunities that will present themselves, whether it's real estate or small business, but you've got to be in the game, and there's tremendous power in your Rolodex. So, and Andrew Bell, actually, in our bank, does it better than anyone I know. He is an object in motion. He never stops. He's always meeting someone new. He's energetic. He's optimistic, and he's always connecting people like I've never seen. And so I shudder to think of the ripple effect of those behaviors and what that will do for so many other people and the opportunities those will create.
But as an individual, you have to get yourself in the position that when those opportunities come, you can take advantage of them. And, to me, as an older professional now, when I can look back, I realize how important that is, because opportunities are going to come your way. You just need to be in a position where you can take advantage of them.
Spoken like a great banker.
What could have been?
But Roger, as a CPA, you're a pretty entrepreneurial guy as CPAs go. I mean, you like to invest in things that are. You don't just advise people. You are an active participant.
I think that's true, because I think that's fun. I think that's exciting. You learn more about that, and as I said, it's another outlet for where to invest that money. And so I think that's been a good success story for me personally.
Well, this has been great, and I think the conversation about relationships is gold for folks out there. So this has been great. Now, Carter, for those that have heard something they want to follow up with you on, that would like to know more about Dime Capital or Affinity Bank that you're affiliated with, tell them how to be in touch.
My phone number is 404-964-7925. I carry that everywhere I go. If the voicemail's full, I'm sorry. I'll do better at clearing that out. And my email is cbarrett@myaffinitybank.com.
Well, this has been great. Carter, thanks for being with us.
Thank you for having me. It's been great fun.
Thank you, Carter.
Roger, this has been the perfect show for a firm that Frazier Deeter, that invest in relationships to make a difference, right? I mean, because that was the theme of this show.
And it's so true.
Yeah.
I mean, it's so true.
Great stuff. Roger, let's do it again next month.
We'll do it.
Okay. I'm John Ray, and for Roger Lusby, join us next time for another edition of Frazier Deeter's Business Beat.